Hi there, welcome to my YouTube channel. So, today I'm going to talk about something which is an interesting concept used in investing. Now, this particular concept has been there in the industry for about 30 years now. It's called momentum investing. And this particular concept is essentially drawn out of the movement of the stock, how well it's moving or how much of scope it has to move upwards. And I do see that with COVID being a part of our lives now, and everyone is accepting that momentum in the stock markets across the globe is coming back. And with that, with having said that, there obviously that creates a lot of scope or a lot of open areas for the investors to play around. So I thought that's a good example to show, and that is why I'm today talking about momentum investing and how you as an investor could benefit from this kind of investment. So let's talk about it. However, before we do that, as usual, my request to you, please like my videos, please subscribe to my channel, please smash that notification bell so that you know every time I upload a new video. Please comment on my video so that I know what exactly you're looking at, and I can then craft out a video based on your requirement. And then also share my videos with people who you think would benefit from my research, from my analysis, and from my videos. So without further ado, let's dive in. So as you know, before I start, I talk about my ebook. Now this ebook is on my journey as an entrepreneur. It's titled Six-Figure Corporate Job to Master Entrepreneur. It starts from the time back in 2010 when I left my six-figure globe-trotting corporate job. So it talks about what kind of preparation I took before I jumped in, what were the challenges I faced as an entrepreneur, and how I overcame those challenges. Now, I'm pretty sure a lot of you would be looking to becoming an entrepreneur. With that in mind, I've put down 3 worksheets, essentially to gauge your mindset so that you are better informed before you jump into this world. And so you have to answer certain questions, get certain points, and towards the end, you will know where you stand. The cool thing is I've scored myself based on my mindset back in 2010. You would get to know how much I scored. And also you'll know how successful I am today as an entrepreneur with 2 companies, one in India and the other one in Singapore, and representations in the US markets. Now the fantastic thing about this ebook, it's available to you for free of charge. It's available on my website. The URL is flashing on the screen. I'll put the URL in the description box below. Click on it, go to the page, put down your name and email address, and the link to download the ebook will be sent to your inbox. So you could then, take a read. I hope you like the ebook. Do give me an honest feedback. Let's talk about momentum investing now. So what is momentum investing? First, momentum investing was all the rage in the 1990s when the markets were rising like a hot air balloon, so about 30 years ago. This strategy is based upon the idea of purchasing whatever sector of market has posted the greatest earning or price gains in the market over the past year. Momentum investing was first documented in the 1993 research paper, Returns to Buying Winners and Selling Losers, Implications from the Stock Market Efficiency, which was published by 2 gentlemen, Narasimhan Jagadish and Saradian Titman. The authors found that strategies which buy stocks that have performed well in the past and sell stocks that have performed poorly in the past generate significant positive returns from 3 to 12-month holding periods. So now, what drives momentum? Let's analyze that. Generally, momentum can be split into 2 different camps centered around investor reaction and underreaction. So So what is overreaction? Momentum driven by overreaction is centered around the idea that stock prices can drift away from their intrinsic values. Delayed overreaction to stock specific news, herding behavior, and investors' willingness to chase the best performing stocks. These explanations are based on investor overreaction. So it's being more optimistic. It's more on taking those decisions which others take. Underreaction, momentum driven by underreaction is centered around the idea that stock markets can drift towards their intrinsic values. Underreaction to stock specific news or holding on to losers to avoid admitting mistakes while quickly selling winners to show success are two behavioral biases that contribute to investor underreaction. So a lot of us do that. Even I have gone through this particular mindset. I have it in some way. But these are essentially, generally momentum. So one where you are really gung ho, and the other where you take quick decisions. You drop those stocks which are underperforming and go in for those which are performing well or has great potential. However, there is one more idea behind momentum, which is called reflexivity, which essentially is, well, look, stocks go up and down. So when the stocks go up, obviously there is more cash for the company, and they may go and invest in expansion or buying some better products or invest in great human resource and all of that, and that may create over time the stock to go up even further. So that's a concept of reflexivity. Now let's talk about how do you measure momentum. It is important to know that not all momentum indicators are created equal. The original Jagadish and Titman research discovered momentum tends to work best when used over a period of time for about 3 to 12 months. So in intermediate term momentum, this is one measure, which is generally defined as the 12 minus 1 month momentum. So basically 12 month minus the last month. So the measure does exactly what it says. It does in that it calculates the stock's momentum by taking the 12 months return, excluding the most recent month. Once we calculate this for each stock in our universe, we can then rank all stocks to find the top percentile of stocks that have the best returns using this formula. The second measure is relative strength, which is the other metrics some may be familiar with. All relative strength does is takes the returns of all stocks over the past year and ranks them using a score of 1 to 100, which is a very normal practice. The higher the relative strength, the better the stock looks from the momentum standpoint. Now there is also one more measure, which is the consistency of the momentum. So basically what may happen is that, let's say the momentum is very gradual and it's slow, it doesn't pick up, or it's not picked up over the last 12 months, then the investors or the fund managers may eventually drop this stock from the portfolio entirely. And later, sometime later, it might pick up. So that is also one measure that some fund managers do take into consideration, some investors do consider that, and it's also, this is quite logical. Now, what are the downsides of or challenges of momentum? Needless to say, no investment strategy is foolproof. The momentum, just like many other factors, can go through periods of underperformance relative to the market. Very, you can underperform. So one of the downsides is the market crash. Momentum can be subject to crashes and struggle during market regime changes when the leadership in the market flips suddenly. Yes. Second, transaction cost. You are buying and selling continuously. Obviously, you're incurring transactional cost. So momentum strategies can also be plagued by higher turnover and higher direct and indirect transactional costs of trading. Third, and the last downside is understanding momentum strategy. Investors who lack an understanding of the momentum strategy are far less likely to stick with it over time and during the periods of underperformance when they occur. So you have to understand the very basics and how these strategies are formed, how you switch between various strategies in momentum investing. Otherwise, you might lose your direction and go into a totally different investment strategy altogether. So, in a nutshell, to summarize, momentum strategy to me seems to be the best strategy that an investor should adopt. It essentially looks at the performance of the stocks, and they keep it's a dynamic basket of stocks that they keep. They keep putting in and taking out based on the performance. Obviously, you incur more transactional costs, but that way it also looks at what is the potential of the stock, how much it can grow. If it's maxed out, then you probably will not invest in that stock. So all of that considerations come in momentum investing. In my company, we do take care of momentum. We do work with some investors. We guide them, we educate them. So if you want to know more on momentum investing and you want to explore that area, then you could definitely write to me on my contact page on my website. I will put the link in the description below, and then we can talk about it. Finally, before I go, I will also leave you with a video that I did on investment. What are the areas that you must look at before you go in for investment in stock markets, so investing like a pro. I'll put the link to that video in the card above. Take a look at it. I've mentioned some great points in that video. So finally, thank you very much. Thank you for listening to me. As you know, my name is Saurav Mukherjee. I'm a digital technology marketing leader with over 20 years of global experience. You will find my LinkedIn URL in the description box below. Click on it, go to my profile page. If you like my profile page, feel free to send me an invite. I regularly work with clients where I try and solve their business, marketing, technological investment challenges. If you are looking to engage in me as a consultant in your company, you could drop me a line on LinkedIn, or you could write to me in the contact page of my website. Like I mentioned just a while back, I'll put the link to the contact page of my website in the description box below. And we can, communicate and see how we can work together. So, finally, please like my videos, please subscribe to my channel, please smash that notification bell, please comment on my videos, and please share my videos. So until next time, do stay safe and stay healthy, and I shall see you soon. Bye-bye.